Hello and welcome to a deep dive into the world of cryptocurrency. It's a world that promises so much. Riches beyond your wildest dreams, freedom from the shackles of traditional finance, a decentralized utopia where everyone's a winner. Except, and here's the kicker, it's also a world fraught with more risks than a game of Jumanji played in a hailstorm. Today, we're peeling back the shiny, often deceptive veneer of crypto to uncover the major risks and challenges that come with digital assets. And trust me, there are more red flags here than a Soviet military parade. So buckle up, grab your metaphorical hard hat and stay tuned as we explore the volatility, security risks and regulatory issues that could turn your crypto dreams into a financial nightmare. Because, let's be honest, the only thing riskier than understanding this stuff is blindly jumping in head first. Let's start with the most obvious and talked about risk: volatility. Now, when we say volatile, we're not talking about your Uncle Terry after a few pints of Guinness. We're talking about price swings so extreme they'd make a Wall Street trader break out in hives. 1 minute, Bitcoin is soaring higher than a SpaceX rocket. The next, it's plummeting faster than a lead balloon full of bad decisions. And the thing is, these swings aren't always driven by logic or reason. It's like the market's being controlled by a room full of sugar-crazed toddlers, each with a buy and sell button. Market speculation is rife in the crypto world. Everyone's chasing the next big thing, driven by FOMO, fear of missing out. And a healthy dose of, let's be honest, greed. And because cryptocurrencies, for the most part, lack intrinsic value, their worth is often based on nothing more than the collective belief of the people buying and selling them. It's a giant, decentralized game of musical chairs, and nobody wants to be the one left standing when the music stops. Add to that the liquidity issues, the fact that it can be difficult to quickly buy or sell large amounts of cryptocurrency without significantly impacting the price, and the constant barrage of often conflicting media hype and doom-mongering, and you've got a recipe for a roller coaster ride that's enough to turn your stomach. Remember, folks, investing in crypto is not for the faint of heart. It's a high-risk, high-reward game, and you need to be prepared to lose everything just as readily as you are to potentially strike it rich. But hey, at least the crashes are exciting, right? So, you've bought into the crypto hype, braved the volatility roller coaster, and managed to amass a digital fortune. Congratulations. Now, the next challenge is keeping it safe. Because in the wild west of cryptocurrency, there are more digital bandits looking to relieve you of your hard-earned digital gold than there are tumbleweeds in a John Wayne movie. Hacks and scams are as common in the crypto world as bad puns on this show. From exchanges being hacked and millions of dollars vanishing into thin air to elaborate phishing schemes that would make even a Nigerian prince blush, the security threats are real and they are relentless. 1 minute you're riding high, the next you're staring at your computer screen wondering if you've been the victim of a rug pull, a flash loan attack, or just plain old-fashioned human error. And let's not forget the ever-present threat of smart contract vulnerabilities. These are the lines of code that govern how cryptocurrencies and other digital assets work, and if they contain flaws, and let's face it, what code doesn't, they can be exploited by hackers with all the subtlety of a bull in a china shop. Now, we're not saying all crypto platforms are unsafe. There are reputable exchanges and wallets out there, but it's crucial to do your research, choose wisely, and remember, if it sounds too good to be true, it probably is. And for the love of Satoshi Nakamoto, always enable two-factor authentication. Think of it as the digital equivalent of locking your front door. Sure, it might be a minor inconvenience, but it's a hell of a lot less inconvenient than having your entire crypto stash emptied while you're busy arguing with a chatbot about a refund. Chapter 3, Regulatory Minefield: Navigating the Legal Quagmire of Cryptocurrency. So, you've braved the volatility, sidestepped the scammers, and somehow managed to hold on to your crypto. Congratulations, you've officially entered the final boss level of crypto risk, the regulatory minefield. Here's the thing. The regulatory landscape for cryptocurrency is about as clear as a mud wrestling match in a sandstorm. Governments around the world are still trying to figure out what crypto is, let alone how to regulate it. It's like trying to nail jelly to a wall while riding a unicycle on a moving train. 1 minute, a country is rolling out the red carpet for crypto businesses. The next, they're slapping down restrictions faster than you can say decentralized finance. It's enough to give even the most seasoned investor whiplash. And then there's the issue of taxation. Is it a currency? Is it a commodity? Is it a digital beanie baby? Nobody seems to know for sure, least of all the tax man. And don't even get us started on AML and KYC regulations, anti-money laundering and know your customer. These are essential tools in the fight against financial crime, but their implementation in the crypto world has been, shall we say, uneven. The fact is, the lack of clear, consistent regulation creates a breeding ground for uncertainty, risk, and frankly, a whole lot of headaches. It also leaves consumers vulnerable to scams and fraud, with little to no legal recourse. So what's the takeaway here? Well, until the regulatory fog clears, it's buyer beware in the crypto Wild West. Do your research, understand the risks, and remember, if a government official ever asks you to pay your taxes in Bitcoin, it's probably a scam. So there you have it, the exciting, terrifying, and often baffling world of cryptocurrency. While it's true that digital assets offer the potential for significant returns and perhaps even a glimpse into the future of finance, it's crucial to remember that they come with a unique set of risks. Before you dive headfirst into the crypto pool, make sure you've got more than just your swimming trunks. Do your research, understand the volatility, protect yourself from security threats, and stay informed about the ever-changing regulatory landscape. And if after all that, you still decide to take the plunge, remember, don't invest more than you can afford to lose, and always wear sunscreen. Just kidding about the sunscreen, or am I? This is the crypto world after all. Anything is possible.